we're all going to live much longer and have no money to fund that retirement. If someone's guaranteeing a return, they're either lying to you or breaking the law.
Welcome to The Big Question, the series from Euronews where we dive deep into some of the biggest topics on the business agenda. Today, I am joined by CEO of Finimize, Carl Hazeley. So thank you very much for joining me today. So just to start us off, can you just tell me a little bit about what Finimize do and what are your main aims?
So Finimize is a financial news, insights and research platform that aims to give everyone the tools to become their own financial advisor. We do that through our world-class analysis, and in so doing, we hope to increase the net worth of an entire generation.
And do you think, to kind of get the younger generation, so millennials and then even Gen Z, into investing, do you think we need a bit of a culture change? There is often that perception that, if you don't have much disposable income, investing isn't for you.
And look, it was true 10, 15 years ago that you needed a certain amount of money to think about investing, and that's just not the case anymore. I can't confidently say that it's as accessible as it needs to be for everyone. I think that's a moving target, and it's a goal that the industry should aspire to. I think there are more misconceptions on the financial services side than there are about actual modern retail investors.
Okay.
I think there are two big mistakes that the industry is making overall. I think first is on the institutional side, where institutions treat non-experts like idiots, frankly, by talking down to them, by assuming that a 19-year-old or a 23-year-old cannot possibly have more than a couple of pennies in savings and therefore couldn't possibly be right to consider for an investment product. The best indicator of how somebody is going to behave and what they need from a financial services provider or an investment provider is their action, their content consumption.
Yeah.
So whether you're 19 or 95, if I know that you've been reading about mortgage rates, interest rates, how to build a nest egg, your emergency fund, that tells me more about what you're likely to do next than just your age, your marital status, and so on. And the second big mistake is treating customers, users, as the tool to make a margin. So what I mean by that is, if you take financial services as a whole, we take medium-level complicated stuff around investing, money, etc. We simplify it so that we will understand what's going on. Then we make it really complicated, put it in front of people and say, pay us.
Yeah.
Right? And that's how you make a margin. And what's wild to me, and I think the big mistake that the industry is making is, you don't go to the cinema without checking Rotten Tomatoes. You don't go to a restaurant or on holiday without checking TripAdvisor. Yet when it comes to money, this big, most important thing in your life, you're being expected to make decisions without access to either the way to make those decisions or the way to learn more. And I think that's where a lot of people are going wrong.
Why should someone who maybe doesn't have that much excess cash to invest, but what potential does it have to grow versus just sticking it in the bank?
It's often a tricky pitch because to warn somebody about some future state, which is so far away, doesn't feel urgent. But the fact of the matter is, if you stick your money in a bank account that earns a couple of % of interest, inflation will eat away at that over time. If inflation is at 2% for 30 years, €1,000 is worth €500. If inflation is at 10% for 7 years, that €1,000 goes to 500. Investing broadly helps shield you from that impact. It will grow your money at least in line with inflation, hopefully more. Over the very long run, it has historically outperformed inflation by a long chalk. And what that means is when you get to later stages in life, you have a nest egg to retire with.
When we think about preparing for the future, and I guess retirement is becoming increasingly far in the future.
Yes.
But how much do we really need to be planning for that now with our investments?
So the short answer is we absolutely need to plan for it now. It's not a case of being able to rely or not being able to rely on a government. It's just the simple fact that inflation is ever present at whatever level it is. And the future is so far away that government plans may change, have changed, will continue to change.
Yeah.
So it's not a reliability issue, it's a forecasting issue. And the one thing you can control is what you do today. And so I guess the bigger picture here is that the responsibility for making sure you've got enough when you stop working has never been more pressing on people. And again, just looking at the big picture stats here, there's a generation of people, millennials and downwards, who are sleepwalking toward a retirement where, with rising life expectancies, improved medications, Ozempic, you name it, we're all going to live much longer and have no money to fund that retirement, which is a terrifying state of affairs.
Yeah.
And that's why it's never been more important to take advantage of accessibility, education for modern retail investors to invest, frankly.
So for someone who maybe wants to think about creating a better financial future for themselves, but feels completely clueless on where to start, what would you advise?
Find a source, a newsletter, a website, a podcast, all of the above, and spend 5-10 minutes each day just building your awareness. You'll find eventually that you can join the dots between an event and a response. The central bank has said something. What does that mean for me? Tesco has reported a record profit. What does that mean for the price of groceries? And from there, you start to realize how much you don't know. It's a bit like learning a language. A little bit every day, and you start to feel more confident. You start to feel more able to engage.
Is there any scams that people should watch out for?
If someone's guaranteeing a return and guaranteeing that something's going to go up, they're either lying to you or breaking the law. Either way, steer clear, because predictions are hard, especially about the future. And with the best will in the world, with the best research in the world, no real investor can guarantee anything. And so that's the big red flag, I would say.
Do you think there is a responsibility there for us to really think about where we invest our money? Like, should we make sure that we are doing good with our investments?
Thematic investing is particularly popular among millennials, whether that is climate-focused or trend-focused. I think there's a really strong argument for it. I try not to be the arbiter of how people invest. I would rather you invest in a way that I absolutely loathe than you don't invest at all.
Okay.
And that's for the reasons we've discussed around it just being necessary for everybody. But if I look at our data, so we survey our members quarterly, and a significant proportion have said, I will not invest in something if it doesn't align with my values, so 30-40%. A similar number have said they would forego a return on their investments if the return was helping people, planet, environment, and so on. At the same time, about half of people just last quarter have said, actually, I'm paring back my ESG-focused investments, which is probably a nod to what's happening politically at the moment.
Yeah, well, on that note, thank you so much for your time today, and thank you for joining me on The Big Question.
Thank you so much.